following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. All right, we're going to take a look at the DAX as we usually do. As you can see, since the high of January the 25th when we had the new moon, we have rallied up to the 78% level. It's very easy to see that. The patterns are lined up. You can see the ratios lined up very easily. So it makes this very interesting that this did not explode to the upside like we have in the S&P and the Dow and the NASDAQ and just about everything else on the planet. What I'd like to share with you now is something really, really amazing. I know you've heard of Stonehenge, and I've known you've heard of the three pyramids at Giza, and you've heard about Machu Picchu and all the other places that are very, very famous in Earth. I'd like to show you one of the things from Anthem, Arizona, folks. This is a little town just north of Phoenix, Arizona, by about 17 miles. It's a little tiny bedroom community, and I want to show you what they've done here, because you're going to see these 5 marble pillars. They represent all branches of our armed services, the Army, Navy, Marines, Air Force, and the Coast Guard. And on November the 11th, at 11:11 a.m. in the morning, the sun shines through all of these marbles that are sculptured onto this beautiful seal of the United States of America. I think it's just absolutely amazing to see this. This was built by a couple of private guys with private money, and they put it into this little park area. And on that day, there's a lot of people there. But I didn't even know that it existed. I've only been to Anthem a few times. So it was very, very interesting to see this here in Arizona. Okay, the number one question that I got yesterday, I had to leave early because I had to give a thank you very much, Mark, for putting this in on that showed the Anthem Veterans Memorial. It's really quite cool. The $64 question is, what happened in the market yesterday? Well, last night, Mr. Winsky from astrotrend.com issued a sell signal. He said it should be good for at least 120 Dow points within 1 or 2 days. And Bill Meridian, of course, this is his last day that the market has to close lower today, or he is going to exit his short positions also. Here's what I think is happening. Now, this is my opinion now. I'm just going to start out with the Dow Jones because that's the one that they report on all the time. The first thing I'm going to do is to put up the Dow Jones weekly chart here. And you'll see here that we left a gap from Friday night to Monday. We left a gap of about 20 Dow points. Now, that in itself is very unusual, but to do it from this level is really unusual. And we're doing it after 5 weeks up. So that is also unusual. Now, if we go and take a look at this Dow Jones on a little bit shorter time frame, squeeze it up so you can see it over the last month, you're going to see something quite interesting. All these gaps will be filled, folks. I can tell you with a high degree of certainty that these gaps will be filled. If you'll notice here, back in January, we tested 20,000, we couldn't get to it. And then on the 25th, on the new moon, we had it was the 24th that we popped up into the new moon, which is the next day. We gapped above the 20,000 area. And then you notice all the enthusiasm. And then what happened? The market came right back down to a 78% retracement and then started up. So what happened yesterday? You'll notice we were hanging right a little above the 127 level, and the market gapped up yesterday, leaving another large gap. So these gaps will be filled. If not, then I'm going to have to take this technical pencil and put it in with kindling and firewood, because this is really mother, God, and country stuff, folks, if you believe in technical analysis. I've studied these markets for my whole life. I mean, ever since I right after I reached adulthood. I've been looking at this. I enjoy it. I do it more time than I should because I stay up a lot and just watching it and trying to figure out what I did right, what I did wrong. But I've gone through every single technical book that is out there, and believe me, gaps will be filled. These are exhaustion gaps, folks. These are not breakaway gaps. A breakaway gap comes out of a consolidation area. This is from a real top area, and this is how they end if you go back and look. I know if you go back and look into in January of 2000, that's the same thing that was happening in the stock market, the S&P and the Dow, but the NASDAQ didn't top until March 24th. So these things can go a long way. Believe me, this thing is very strong, and I can say with a lot of confidence here, even if we are still in a bull market, and right now it looks like we are, you're going to get another chance to buy it. Because, you had a chance after the market got above 20,000. It pulled right back to a 78% retracement of the low on the 23rd of January. So those are the things that I'm looking at. But I've looked at these gaps for a very long time. And if someone wants to debate me on it, I would be very interesting to see what would be happening in these things. So we're looking at it. Steve Rhodes is telling us that in time bars it would be a 3 drive to the top on the ES daily, and I've already was looking at that. Steve, I'll put this up here and show you that this is also what we're looking at, and you'll see that you'll have a really nice spot up in here to. The bars, in other words, from the 12th of January until the 26th, which was the day before the full moon, is equal to the 31st to where we are now. And we had the lunar eclipse and full moon on Friday. However, the market gapping up yesterday is either a big tricky thing, or this thing could be running again. And remember, gaps could go more than you think. Here's the most amazing thing, folks. Well, I'm going to do that after we get done with this. Well, let me get started at it, because this is the one that really, really confounds me. Here is this is the Dow Jones E-mini. Let's just get this up here. And you're not going to believe this, folks. With the market skyrocketing yesterday, we had drops in the open interest in the Dow Jones E-mini and also in the NASDAQ. Both of those had drops in open interest. Folks, the textbooks on technical analysis tell you that when open interest is dropping and prices are rising, that's short covering. And once that's over, look out. But, maybe it's different this time. It has been in the past, and I guess it'll be in the future. We never thought we would see a non-politician be elected in the United States, but that's pretty much the same thing. I saw an interesting thing from one of our debtors sent me something about Abraham Lincoln, how much he was hated when he was elected in 1861, that they had to have extra secret service and everything around him. And that's pretty much what's going on to these days. We'll have to wait and see how this stuff works out. We got to talk about gold, folks. There's a new sheriff in town, and I'm afraid this thing is going to take off. We want to be watching it really closely. We hit one of the magic numbers last night of 1220, which was we'll take a break.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I finished that last segment about the open interest in the New York, the Dow Jones E-mini, and also the NASDAQ E-mini. Both of those had drops, and they've been dropping all week, but yesterday with that explosive move to the upside, we also had drops in open interest. It wasn't very much, but the fact that it could even drop at all is amazing to me, because that usually means powerful new buying, and that's not what we've been seeing. We were talking about time counts. Steve Rhodes graciously told us about the E-mini is making a 3-drive on a perfect ABCD with time counts, as we posted in there. I've also posted the one that I put in the newsletter this week. It's the NASDAQ. It's been in a 50-day cycle for quite some time, and that 50th day was Friday, and of course we gapped up again on the NASDAQ also. So this was either a big exhaustion gap here yesterday, or we're going to see something. Well, we've already seen something we haven't seen before, but this could be even more dramatic. I read a lot of books over the years on technical analysis and the markets from the old days, because I think you learn something from them. One of my favorites, of course, is the autobiography of Bernard Baruch. He was the Warren Buffett of his era. During the 20s and 30s, he was they wanted him to be Secretary of the Treasurer under, who was it? Woodrow Wilson? I think it was Wilson. And he didn't want to do it. He was a very close personal friend to J.P. Morgan. They lived down the street from each other there near Rockefeller Plaza there. But his autobiography really is something you should read, because it's really amazing. He has an interview in there with what was her, Fanny Brice, who was the Meryl Streep of her era. Well, Meryl Streep or Elizabeth Taylor of her era. And she asked him, Mr. Baruch, how do I make money in the stock market? And he says, you buy low and you sell high. And she said, oh, that's great. How do I do that? He says, do you have about 40 years? And that's pretty much what it takes sometime. It's taken me 56, and I'm not even there yet. Who knows? We'll see what's going on here with these markets. But this is what we're looking at with the NASDAQ. Folks, yesterday I had to leave early because I had to do a special webinar for some folks that in Fibonacci land in Italy. And they were really, believe it or not, they're all Italian. And there was one Canadian in the room, but he spoke Italian. I had to have an interpreter, so it took several hours to get the thing over with. But they just didn't believe in Fibonacci. And so what I did was I started the thing about just bringing the euro in. I just put the euro up, just like we did yesterday. Because watch this, folks. This is equivalent to what happened to gold, same pattern, when we got down to this level right here at the 105.30 level. But I showed this, and all the detractors showed the 3 drive pattern. This is the same pattern that you're seeing in the S&P right now. You have the same highs are equal, the A, B, C, D is equal, everything's equal. Doesn't mean it's going to work, but that's what happened. So they asked me, say, well, you trade live, for us. And I said, okay. I said, I'll trade live. So what I did was I just picked out a nice little chart of the euro, and what we did was where did we put it, Larry? Oh dear, no, that's not fun. That's not fun. That's not fun. That's not fun. This is not fun. Where do these things disappear to? Why do they treat me this way with computers? I just don't understand it. It has to be here. I just had it out here. I don't understand. Oh, this is really frustrating. Anyway, I wanted to show you the setup that I was looking at here with the darn thing, and I'm going to find it. So anyway, I started what the euro was doing and what I thought it was going to do, for the time. And as we started the show, we were right at a really nice retracement level back in the euro to be a sale. And here it is. We found it. Yay. Okay, we'll put this up here. This takes me a little bit of time. I got too much on here. Anyway, you can see here when we started the show, which was around when it was trading at this, yesterday being the 13th, we were trading up there at this 106.40 level, and it already made the high, which was a perfect ABCD correction. We talked about that one on the show yesterday. And then, of course, the market started to come down, and it made the first target there, as you can see at the 105.90. That was the 1.27 swing of the low from the 10th. And so we picked up, almost 42 points on that. And then we argued for about an hour on all the other things about Fibonacci and why it works sometimes and why it works other times. And the difference is it's not just one number, folks. You have to be looking at multiple numbers. You have to know where these swings come from and where they started, and that tries to help you, how the thing is coming together. Technical analysis can't be disputed. Dr. Andrew Lowe at MIT wrote that book, The Non-Random Walk Down Wall Street, that basically repudiated all of Burton Malkiel's work about the random work down Wall Street. The problem is it's not random all the time. There's chaos in the market, but within that chaos are these non-random patterns that repeat over and over again, and that's what we're trying to do. The problem is sometimes they don't work, and that's what you have to do, is you've got to figure out when you're wrong and get out and then move on to the next one. So that's the main thing that you want to start looking. Anyway, we went through the almost about an hour and a half, 2 hours, I guess, and I answered as many questions as I could. But I don't think I made any converts into Fibonacci. And these guys are right in Italy. I mean, one was right there about 2 miles from Pisa, he said he lived. So it's really an amazing thing. But you have to learn to do it yourself. That's the main thing, and keep that in mind. Let's get to the gold market, because we have something very important to talk about in the gold market. We had a really interesting situation here yesterday. We talked a little bit about this because we talked about the old highs that we had in January, if you'll remember, at the 1220 level. Yesterday's low in the gold was 1220.30. That was the exact 61% retracement. Now we've rallied back up to be above the 1237 level. It is if gold breaks out to the upside here, you're going to see a pretty big move to the upside, because basically what we were looking at here is just a minor 4-day correction, looking at this 4-hour chart, and then you'll be heading higher, much like what happened during the end of January between the 24th and the new moon on the 27th. That would be the same type of thing that would be happening. So watch the gold. It looks very, very interesting from here. I think you have to buy it if it gets above 1246. Probably should buy it before that, but anyway, that's what we're looking at yesterday. Yesterday I had an order in gold at 1220 even. It got to 1220.30. That was my mistake. The order should have been put at 050 or 070. Don't ever put your orders at even numbers, folks. That's a rookie mistake, and I acted like a rookie, so I didn't get filled, and I missed the $1,500 move in gold yesterday, but that's neither here nor there. Today's a little better. We were able to get the order filled. But anyway, we'll watch this very, very closely. We've also had in silver, we're breaking out in silver, folks. If you'll take a look here, we're now trading, haven't broke out dramatically yet, but we've got above $18 an ounce in silver now. So keep an eye on that one too. Sarah, what the heck?
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're going to take a look now at the U.S. dollar index. We were just talking about the euro, showing you the support that we have at this level that we're pretty much at right now. Could go a tiny bit lower, but I'd love to see the euro get down to the 105.30 level. That would really be, that would fulfill all those numbers that we had in the first chart that I posted about that. So that's due to happen today. And the way we try to do that is we count the number of bars from the high to the low in the AB swing, and then we count the bars from the high to the low in the CD swing. And when that comes together with price and time, then you're going to be able to look at it. Now, we do have Janet Yellen will be on Capitol Hill in about 30 minutes talking, and I'm sure there's going to be the usual rhetoric that they talk about. Folks, I believe very strongly that the Federal Reserve with this quantitative easing did everybody a disservice by putting, $4 trillion out there to help the banks. It didn't help anybody else but the banks because, getting private loans is almost nearly impossible with this. So I think the real problem will be in the bond market when this thing hits because it's many, many times bigger than the stock market. There was a lot of talk yesterday about the market with hitting $20 trillion. Can see that's a pretty substantial amount, and it did. It probably we've seen real estate prices in some of the larger cities, go crazy. So we'll watch this really closely. Now I would like to show you one other chart. This is from an old friend of Arch Crawford, who was very, very popular during the 1950s and 60s and 70s and 80s. He was on Louis Rukeyser's money thing every Friday. What was that called? Money Week, I think is what it was called. Anyway, his name was, there you go. Just getting ready to do it, and then I forget. George Lindsay. And his famous pattern was three peaks in a domed house. And as you can see here, we have that pattern here in Facebook as long as we don't get above the 136 level. What you're basically looking at is the three drive to a top pattern. That gives you your three peaks. And then in equal time, you're going to see from the time from July to October, if you make that same cycle and you just make a little slightly higher high, he called that a three peaks in a domed house pattern. And, I would like to see it actually get up to the 140 level. That would make the ABCD from June, right at the Brexit thing, and then back to a 78% retracement. Can you believe they had a 78% retracement in Facebook in the master this big bull market? You can see on November on election, we got down to the 113 level, and now we're trading at 135 or so. So that's another pattern. It's a very rare to be looking at that, but that's pretty much. See what's happening as we go. Okay, yeah, talking about Marty Zweig, what a nice guy he was. Anyway, that's okay. Let's move on to the next one here that I wanted to talk to you about, and that is the hold on just a sec, folks. Just get back to the gold market a little bit. If we get above I've got to stop buy in. I'm going to try to buy gold if it pops above the 1237 level. If gold gets above 1237, I'll be looking to pop it out. It risk only about $4. I bought it earlier in the morning when we broke that little trend line at the 1228 level, and that was being. By the way, would you fellas be interested in knowing how I do short-term trading? I mean, because I do. In the mornings when I'm getting ready for the show, I'll look at pennants and flags and Fibonacci numbers and breakouts, and that's you're trading with the trend all the time, which sometimes it's a little easier to do. But maybe we'll work out something like that. But that's what I'd be looking at here in the gold, is to see it break out above that 1236 level. And then we would be looking at a market that has a potential to clear that old high today, because silver's already done it. Silver's got up to that $18 and above $18. So that's it. Now, we're having a little bit of a sell-off this morning, folks. This means absolutely nothing because, there's so many people that have been buying this stuff. Every time, it opens lower, someone's willing to buy it. Yesterday, opening higher, confused a lot of people. And I can certainly raise my hand on that one, because when I saw it open, I said, WTF? And of course, all of you know that means, where's the Fibonacci? And I couldn't see what was happening. And so it was a very short-lived experience. But anyway, that's what you want to be kind of watching as you look at some of these things today. I will show you one other thing that looks interesting, and that is from Andrew's pitchfork person. He does some really interesting work with the Andrews pitchforks, and he's showing the long-term chart here on the E-mini S&P, showing you the resistant bands that you have there. And here again, you can't make these things up, folks. They're basically doing the same thing all the time, just over and over again. But we'll be keeping a close eye on that. Someone asked a question last night about the VIX index. How could the VIX index gap up yesterday, given the fact that we had, the market was, that actually also surprised me, is when the VIX actually gapped up yesterday and closed, hold on just a second here. You'll see it gapped up and it closed above 11 and change in a matter of, with the market up 160 Dow points. Now that in itself is very unusual, but I guess it does happen. And I asked someone that happens to be a Wall Street member of the New York Stock Exchange, and he said the way that happens, he said someone with a very large trader is taking protection against positions. He said that's the only reason that would happen that way. And so whether that's the answer or not, I don't know, but that's what I was told. So we'll see if that's going to be, the way that it really occurred. The most amazing thing to me is the fact that all last week and then again yesterday, we had this drop in open interest in the Dow Jones E-mini and also the Dow Jones NASDAQ. Remember, the Dow E-mini S&P still had a slight increase, a very slight increase. It's got 12 million outstanding, I believe, or something like that. Some ridiculous amount, and it was up like 0.000% in open interest, but the other two were actually down. You would think that they would be, going higher, but that is in fact, what has happened, thus far. So those are the main things that we're keeping an eye on here this morning. I did mention about Norm Winsky, his sell signal today. He said it should be good for 2 days for at least 120 Dow points. And if it doesn't work, call him at 555-555-5555, and you can complain to him. Bill Meridian, this is his last day for his sale. If it closes higher today, he will stand aside. And that's pretty much what we're looking at. The IWM did make a higher high yesterday by 3 cents, I believe was the exact number, which rather surprised me considering the rest of the markets had gone higher by quite a bit. So we'll see. Anyway, I firmly believe that what you're seeing here is an ending move, not a beginning move. When you see these big gaps like we're having in the Dow Jones Industrial Average, folks, you go back and look at a Dow Jones Industrial Average, there's only a couple gaps in that chart. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, we are taking a look here at the crude oil chart, 4 hours. We've been in this area between 51 and 55 for quite a while. Folks, now, if we get above this one, this high-level consolidation, this will mean even more technically than I think what we've seen in the Dow Jones. The reason for that is the correction that we've had after the market bottomed down at 42 didn't even come down and make a 382 retracement. It missed it by about a half a buck. And we've had higher bottoms now all during January and February. That means if we can get above this 55 level, this would, I would think, would really be a valid breakout. And as you recall, we've had Bill Meridian on, who understands the oil market as good as anyone we've talked to, would tell us that we're most probably heading towards $61 to $64 a barrel. So that's the possibility. Now, again, if we don't get above that level, you know, it's just massive resistance. But the fact that it can not even back off 38% over that 3-month period, to me, it looks like it's a very possible, possible move. So we've got the Fed's chairman going to be speaking here in the next 45 minutes to an hour. She starts in about 15 minutes. So, pay your money and take your choice, because, she could say anything she wants. And remember, the Fed has about 200 traders standing by to take profits whenever they want. So pay attention. That's the way it goes. Anyway, we'll take a look at those. But anyway, the gold has to break out. No, you don't want to go long the gold until it breaks out of the 337 level. 1236 level. If it did that, then you have a valid breakout to the upside. But until that time, you don't really have that. So that's what we're watching here in the gold this morning. We'll follow up with that, of course, tomorrow's show, and we'll keep a very, very close eye on with that. Now, I did want to bring up the IWM again, because we did make a slightly higher high by just a very small amount yesterday. We were been in this area for about 8 weeks. We did go up and tick out that area again, which still completes a 1, 2, 3, 4, 5 expanding reverse point wave, in my opinion. The reason why I say that is because there was no really follow through either yesterday or today. That could still come, of course, but this is what we're watching right now. So It's very easy to be long here. It's very difficult to be short. The shorts absolutely have to be scared to death, especially after yesterday on the WTF day. And, where's the Fibonacci? And anyway, we will see how much impetus it has. We've been up for 5 weeks in a row, 7 days, which those are outlier events. But whether they continue in that direction or not, remains to be seen. A lot of timing stuff. The fact that the astrology should have been on Friday, miss it by a day or two, that's possible too, but we'll see, and we'll be able to see what's going on with that. There is some strong support, I believe, at 2317 in the E-mini S&P and around 5230 in the NASDAQ. And but, it's going to take something in order for this market to really turn. It's probably going to take some type of an announcement, an event, or a geopolitical, baloney. We see that all the time. But those are things that, you don't have any control over those. Those are outlier events, and you don't want to, really, get involved with this. If we look at the 4-hour chart in just a second, we'll put it up here, in the Dow Jones, yes, that's where I was looking at. That was the break of Monday morning. You're very good. The 2317, 2318 in the S&P is where it broke in its first break of about 6 or 8 points on Monday, and then it took off from there. So that tells you there was a lot of buying. If that reverses, then you've got something else to look at it. So that's the primary thing that you want to be keeping an eye on as you look at this for sure. Well, nothing's for sure, but what are you going to do? Pay your money and take your choice. So we'll see. But 2,300, the even number of 2,300 probably means more than anything else because, it's a magical number more or less, an even number like we had in 10,000 in the Dow. So we'll see, And, on the upside, I have no more upside targets except at 2340. There's a very, very long-term ABCD going back going back a long time, and that could certainly be hit also, but, that's neither here nor there. We're getting good volatility this morning, which is pretty good. We had a move, down from 27 down to 22, 5 points, and right back to the 78% retracement. And if you just did a little bit of quick math on this, you'd see that the ABCD structure on this takes you to this 2320 level that we're trying to look at today for potential move to the upside. Now, here someone's asked a question about the gold, about buying in the breakout. Folks, that's what I was trying to say to you when you're looking at these intraday trades. You want to be watching these what we call a valid trend line. In other words, where it breaks support above the 78% retracement. That's when you're trading in the direction of the short-term trend, and you're also looking at a very, very low risk, because once it breaks that move to the upside, which we could have done at 1236 we're only down $3, it could still be a valid trade, but you don't want to be in it until it gets to 1236.50 or 1237. Then you put your stop below the recent low, which right now is at 1233 and change, and then you have a $3 risk in something that's valued at $120,000, and you can trade it for a $300 risk. So those are the main things that you want to be watching. I want to switch over to Treasury notes and Treasury bonds here, because this is where the real problem is going to come in these markets when it does come, and if it ever does come, it's going to be because of the bond market. It won't be because of the stock market. It'll be because of the bond market. It's many times bigger, and we'll see what's going on. So Steve Rhodes made a really good question. We should check on this. How many of the S&P 500 stocks are trading above their 50-day moving average? 70%. Boy, that's a pretty good figure. That means that there are a lot of buying. We didn't see so much of that earlier, but we sure saw it last week when we had those 3 gap ups in the Dow Jones, and then also gaps up in the New York Stock Exchange Index, which is really hard to do. And we had one of those yesterday too. We had gapped up on the New York Stock Exchange Index, and that gap is still valid. So that would be something to watch. But 1320 is 1320 would be the first spot to expect some support here in the E-mini S&P if it should get there. But we'll have to wait and see if it is going to do that. Well, let me see. We got it. Oh, we got a break coming up here in a second, and we're going to come back and finish up with some of the things that I think we probably ought to pay attention to here. So we'll see. Well, Mr. Kramer thinks the market is not expensive. Well, he shouldn't, because he makes $2 million a year to say that. So he better say that, because if he tells them that it is expensive, they'll be looking for somebody else to fill his spot, and there'll be a new. I forget what that thing is, but he's an entertainer. He really is. I have some friends that know him, and he's actually a pretty nice guy. Anyway, that's what we're watching. When we come back, I want to talk a little bit about the grain markets, because I think we're at some key levels in some of these things, and we'll see. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and someone had a question about George Lindsay doing his work on the Dow Jones Industrial Average. He did, but, a Dow Jones Industrial Average is just a price chart. I think the pattern could be, overlaid on just about anything, because if you don't know what the thing you're trading is, you can't tell the person what it is, because all charts look alike. Now, the chart that I just posted in here is a chart from one of the folks that asked us this question about a week or so ago about this little pretty much a penny stock is trading for $1 at $1.08. You'll notice that it got down to a perfect 1.618 expansion of that last move, and the stock rallied 80%. It went all the way up to $1.83. So, you know, that's, I'm not saying to do that. I'm just saying that these patterns work if you've got something that's relatively liquid. Look how these lines line up, folks. I mean, this is not a random market. You know, it goes to certain spots and bounces off of them. You know, we don't have the actual, you know, key to anything, but we try to do is to put, you know, put the little things into a puzzle that you can at least, you know, look at it. And that puzzle in the euro comes in at 105.30. Got to watch that really, really close. We'll still probably have a chance to pick up the gold, but if we get above the 1237 today, folks, you have to be long with about a $5 stop and, you know, put your stirrups in the saddle and put on the seat belt and put on the spurs and give the old swirl a nice little kick in the rear and take it for a ride, because I think gold's got a chance to go from here. Silver's already breaking out, and it has a tendency to be leading gold sometimes. Other times it you know, goes back behind it. So whether it's going to happen or not. This looks really bullish. I'd love to see gold come down one more time, you know, to shake everybody out down to the 1170, 1166 area. That would be ideal, but I don't know whether we're going to get that or not. We're in a 4-day correction that didn't really give us much. We're down $19, which is, you know, almost exactly 1/2 of the harmonic number in gold also, and it stopped right at that 1220. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.